Tuesday, February 28th, 5:20 p.m. New York time. U.S. futures markets are closed. It's the last trading day of the month. Let's start looking at the futures, the broad markets. We'll include the yields, currencies, commodities. First, we'll look at the yields. Look at the 30-year yield. For the month, it closed green. It make a higher high. It engulfed that prior month. So for the first month of the year, for the second month of the year, we made a new high. Still below the high of last year. That's for the 30-year. The 10-year yield, also, we closed above the high of last month, a new high for the year. Bullish engulfing candle also. The 5-year yield, yep, huge. New high for the year. And the 2-year yield, new high for the year and took out the high of last year. So the shorter term yields, record high. Yep. Following second, what I mentioned here, the 5, the 10, and 30. Putting pressure on the interest rates to be higher. Typically, when you have the yields go higher, you have a stronger dollar. Let's go to the dollar. US dollar index. So for the month, we did not make a higher high. Nope, we're still below the high of the first month of the year, which is that red candle. We did make a lower low for the year, and we came back in and closed above the body of the first month. So it's an acceleration phase. Buyers came in, stepped in here, where you see this demand zone it drew. It's interesting too. It came down and tested midpoint of that big candle. Midpoint, that gray horizontal line, buyers stepped in, as expected. Yep, so we're still below the high of last year. But since we closed green for the month, one would expect us to continue with the momentum higher, possibly trend reversal. Going up here, maybe to the midpoint here. First, we have to see how we break above the high of this year. Yep, strong dollar. For those still with the old school cryptocurrency, Bitcoin, close trade for the month. Did make a higher high, higher low. Look at that little dodge, that means indecision. It did test the midpoint of that candle. But remember, that was an impulse move down, retracement. So one would expect it's going to have some kind of acceleration over here. It might have a reverse to go lower. All right, now let's look at the major currencies inside the US dollar. See how they're all going against the US dollar. On these monthly candles for the euro to make a new high for the year, rejected it, and closed below that body. So it looks like this may be setting up to trend down. Remember, the euro is the largest weighted currency in the US dollar index. So if this continues going lower, it should push the dollar higher. Good for you people that are still looking to travel overseas or buy products from abroad. Japanese yen. Nope, it also already reversed. Yep, it already reversed. Made a lower high, lower low, closed red below the prior month. So this already reversed. The trend's reversal. First, like I said, looking here on the euro, it has not done so yet. So one should be already bearish bias. The yen. Yen is the second largest currency in US dollar index, and the third largest currency in US dollar index. The British pound. Well, the British pound. It's a yellow candle. That means the inside candle, meaning it didn't take out the higher low of the prior month. It's undecided what it wants to do. Excuse me. It means indecision. Yep. But it's an acceleration from the prior trend up. So the prior trend was up, acceleration. One would expect it should be breaking out to the upside. So because this occurred on the monthly time frame, trade eye there, if it breaks above it, the new month, one should be considered trading bullish. And if it trades below it, breaks below it, one should be trading bearish. I'll say it again. If it breaks above, anytime this month breaks above, you should be considered trading bullish. If it breaks below it, you should be trading bearish. And there are stock ETFs you could do on this. So if you don't want to trade the futures contracts, if you don't want to trade the Forex, you could just simply buy the stock ETF through your broker. You can make money. Canadian dollar, red for the month. It did make a higher high, new high for the year, and then closed deep retracement of prior month all the way down here. But it didn't take out the low yet. Nope. It's in this demand zone where buyers are. Interesting. It didn't break below it. It's a potential reversal here to the upside. We'll see how things go here. And this Swiss franc, it also made a new high for the year, rejected it, just like the Japanese yen. It broke below the low of last month, so it's a trend reversal. Yep, two safe haven currencies, that being the Swiss franc, Japanese yen. Money's not flowing into those. Money's flowing out of those two safe haven currencies, go into the third safe haven currencies, or the first. Because there's three major safe haven currencies: US dollar, Japanese yen, Swiss franc. And you already see they're selling Swiss franc, they're selling Japanese yen, buying US dollar, making US dollar strong again. And the Australian dollar, just like the Canadian dollar, heavily weighted to commodities. Well, Australian dollar made a new high, rejected it, deep retracement. So this does support, like I mentioned, why the US dollar is strong, because we have higher yields and most of the other currencies are going lower. Again, these countries, their central banks could raise interest rates too to help strengthen their currencies. Well, let's go look at commodities. We'll start off with the category of energy. And the largest weighted one is crude oil. How do we do? Well, crude oil closed at $76.84 a barrel. Yep, it's lower than it was last year. Or you have some people still making false claims saying crude oil is at all-time high. And again, they should be called out because they're wrong. That was the high of last year. It's not the all-time high, but that was the high of last year. But now we're way below it. We also made a lower high than last month and a lower low than last month. Last month, January being the first month of the year, was the high of the year, and it rejected that and went below. And it's an consolidation, huge wicks in the bottom. But look at this consolidation, breakdown, consolidation, staircase pattern, lower low. Why would that be? Well, the Federal Reserve has many tools, and one of the tools is help keeping the cost of crude oil low. Yep. To help reduce inflation chances. Many tools, and most people don't even talk about these tools the Federal Reserve is using. It doesn't use it too often, but it's using it now. So you should be giving congratulations, because again, if they didn't apply that tool, then crude oil would be higher, and then your products and services would be higher, much worse than they are now. Again, good policy they're doing to help reduce this and lower. Natural gas made a lower high, lower low, new low for the year. Look what it did, but it did close green. Huge tail on the bottom, bullish pin bar. Maybe we'll go retrace here. It also took out that swing low from all the way back here. That was 2 years ago. 2 years ago. Yep. Let's remove that. And look at that. This was a demand zone. Buyers came in again. So one could do several trades here, which I've been sharing the past few days, a trade idea. You could be buying a stock ETF if you haven't already. Some of us already bought it last week, and some of us bought it weeks before when it was down here. Why would you not want to be buying it? It's not going out of business. Those are commodities. Let's go to the next. Metals. Category metals. Gold. Look at that. Made a new high for the year, and then it took out the low of last month, closing red. Yeah. Bearish engulfing. Again, this trend up here and that occurring on top of it is bearish engulfing. One would expect gold to reverse and go lower. Again, strong dollar can put prices of metals lower. It's also tested this supply zone where we want to expect to be sellers there. Silver, it already did that. Look at that. made a new high for the year, rejected it, went all the way down, tested midpoint right here of that green candle, and buyers stepped in there. Again, still made a trend reversal. Platinum, or is that palladium? New low for the month. New low, higher low, lower low. Yep, the trend is down. Tested this demand zone of buyers, and buyers stepped in here as expected. This was all shown ahead of time, so one already was aware of these, situation awareness. Copper, used for industrial use. Inside candle for the month, indecision. Yep. Last month was the high of the year, so supply zone, demand zone. That was commodities. Now let's go look what a lot of us are interested looking at. Agricultural grains and livestocks. Your staples. Corn on the monthly candle. Yep. Red. Lower low, lower high. Took out that month. January. Broke below and closed below this trend line. So let's remove that trend line. So the trend is down. Momentum's down. Yep. Corn. Used for many things such as food, products for humans, and for feeding animal, and for ethanol. Might be coming down here to the demand zone. So again, if this is lower, one would expect good luck. But again, this can help keep ethanol lower. But again, the feed for the animals, will your food products be lower? Wheat. That red for the month. Also trending down. In soy, also red for the month. They make a new high for the year and then sold off. So you got the grain products making new highs and then selling off. That's good. That's good. It's helping slowly reducing the chances of inflation. Okay, let's look at the livestock, live cattle. Oof. New high for the year. See, last month was the high of the year. We took that out, so let's it also took out the high of last year. That was the high of last year. That was December, and January was inside candle. Live cattle. Oof, it's expensive. Who could afford to eat red meat? Yep. And this last month was the low of the year. So when we zoom out, we can see we're almost at the high of here. That was 2015. 2015. And here was a swing high from 2014 November. We're getting up to these highs for the past 10 years. Again, these are not record highs, but these are highs for the past 10 months. Live cattle, red meat. Again, there's a lot of embedded costs that go in here that's making this expensive. Maybe there's not enough red meat to feed the population that are carnivore eaters. Feeder cattle, just like it sounds, slaughtered to feed other animals. Yep. New high for the year. It's also coming into that swing high. All the way back here. That supply zone. Also, that was 2015. And let's finish this off with lean hog. Well, lean hog made a new high for the year, just shy of missing the supply zone of sellers. And it also made a low for the year down there. So now it's a huge consolidation. Big difference, lean hog versus the red meat. So one should consider to take into account the weight of 1 pound of eggs versus 1 pound of poultry chicken and see which one weighs more. It's not that hard. You can look at the products. I highly recommend you look at each product. What is the pound of the lowest quality of eggs and the lowest quality of poultry in your retail store per pound and see which one's less. Are eggs lower yet, or are eggs higher than the pound of poultry? Thank you, as always, for spending just a little bit of your time with me. If you've gotten value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on my PayPal or Venmo. You can leave a small tip. If you don't want to share financial support, no problem. Just click the like and subscribe and leave a comment, please.